Hey everyone, it's Zack Beck. Cryptocurrency's been on a wild ride as of late. A recent flash crash wiped out nearly $1 trillion in total value for the entire cryptocurrency market as a whole. And recent events have triggered this to occur, including regulatory actions from the Chinese government, tweets from Elon Musk, as well as indications from the United States federal government that they might be creating their own version of cryptocurrency. So what I want to do in this video is break down in detail what exactly is going on, why we're seeing such volatility in the cryptocurrency space right now, and the specific steps you can take to navigate this terrain to make sure that you come out on the other side ahead. So let's take our time, dive into the details, and jump into it right now. As previously mentioned, we're seeing a lot of volatility in the crypto space right now. As a matter of fact, the recent flash crash dropped Bitcoin's price below $30,000 and dropped Ethereum's price below $1,800. These are significantly lower from their recent highs, but what we are seeing happening across the board is a lot of volatility. So you might be sitting back and asking yourself, well, why is this happening? One of the bigger contributing factors that's going into this is actually some of the recent actions taken by the Chinese government. And what they are indicating is they want to have more regulation associated with cryptocurrency, and they actually want to be banning that moving forward. The one thing that I believe has been missed as a part of this most recent announcement is that back in 2013 and 2017, the Chinese government actually said they were banning Bitcoin and all cryptocurrencies writ large. But one of the things we've seen happen is a lot of the mining takes place technically in China as a whole of all these different cryptocurrencies, but primarily Bitcoin. So when people heard this news come out, they thought that would have a direct correlation to the price of Bitcoin, and therefore people began to sell off Bitcoin. One thing I believe is important to understand when it comes to how the Chinese government is acting in this regard is that when they issue statements and it gets picked up on media outlets here in the United States, sometimes things get lost in translation. As a matter of fact, like I previously mentioned, back in 2013 and 2017, they issued similar statements that had a bit of an impact on the overall cryptocurrency market, but now it's just been magnified by the way in which we distribute media attention here in the United States. But what you're seeing is a general narrative coming out of the media as a whole is that Chinese government is not supportive of Bitcoin or of other cryptocurrencies, therefore there's a negative association for the future of those currencies, and that contributed to a lot of people panicking and selling off. Another significant contributing factor to the volatility of cryptocurrency is Elon Musk. He has been tweeting nonstop about his approaches towards Dogecoin, Bitcoin, and other versions of cryptocurrency writ large, and it's causing a lot of volatility in the market because people are following his lead. If you look back into February of 2021, Tesla bought $1.5 billion worth of Bitcoin, sending the price much higher than it was before, and people saw this as a validation of cryptocurrency writ large, and then we saw more investors jumping into that space from the retail side of things. But recently, he has tweeted a very different approach towards Bitcoin, saying that it is not environmentally friendly, and until it becomes more environmentally friendly, Bitcoin would no longer be accepted as payment for Tesla, and he was going to work with other cryptocurrencies such as Dogecoin to try and make them more efficient to allow them to actually be able to work more effectively in the marketplace. So this caused Bitcoin's price to fall. Furthermore, it was indicated in a tweet that he replied to that he might have sold some of the holdings that Tesla had of Bitcoin as a whole, and then he contradicted that later in the week. During the crash that was actually occurring, he tweeted out diamond hands indicating that Tesla had not sold any of their Bitcoin holdings. So all of this confusion caused investors to panic, and they started selling off their holdings of Bitcoin, and that really caused a trickle effect throughout the entire cryptocurrency market. And that is one of the things that you're seeing of the danger associated with being involved in cryptocurrency, is that we have big institutional investors and big, large, what we call whales in the marketplace who hold a massive amount of overall capital, and they are the ones who are indicating where the prices are going to go. So just by a simple tweet on his phone, he can send the price rocketing or dropping, and that is not good. Furthermore, what we have found is that because of this contradictory nature of these tweets, it also causes people to have more confusion, therefore they're panicking and making emotional decisions. So one of the things I believe is important to note is that the whole concept of cryptocurrency writ large is for it to be decentralized, to not allow one government, organization, or institution to be controlling it. Therefore, if we're at a moment right now where social media is really the influence behind how these different cryptocurrencies are working, it's kind of counter to the overall essence and ethos of where they should be going. So I just want to put that out there as a point of concern and caution, especially since this volatility is unlikely to cease at any point in time moving forward. Furthermore, one thing to bear in mind is that as we're seeing these prices go down and we consider them a crash, we have to actually look much further back to back maybe in like December of 2020 when Bitcoin was trading around $7,000. So obviously now being up in the $30,000 range is still a very healthy gain, but when you see that it went all the way up to over 69,000 or 70,000, you can see why people are a little bit concerned right now. So from that standpoint alone, if we're allowing one individual to influence our approach towards investing, that is probably not a place for you to be. And if you have been panicking recently because of the cryptocurrency volatility, you might have too much money invested into it, and you might want to rein that back a little bit and put your money into more peaceful places that you know will actually grow over time, such as index funds. So we started with regulatory statements coming from the Chinese government. Elon Musk tweeted all over the place about his particular approach towards Bitcoin. And then we, on top of that, had the US Federal Reserve saying that they are actually looking into the possibility of creating their own digital currency moving forward. This was a statement issued by Federal Reserve Chairman Jerome Powell, and he says that they are going to create a form of a digital currency that would be complementary to the US dollar. This is something they're going to issue a paper about and talk more in depth about, but I wouldn't be surprised if within the next 5 to 10 years, we actually see something coming from the United States federal government that is some form of a digital currency. Now, one thing to bear in mind, like I previously mentioned, is that the whole concept of cryptocurrency is for it to be decentralized. So as soon as it becomes centralized within a federal government, then it's basically just another iteration of the US dollar. So it's not going to be the same as a Bitcoin or an Ethereum as a store of value. It's going to be intended to be more of a currency where you can actually transact with it. And that is one of the biggest things I think is important for us to understand when we're thinking about Bitcoin, Ethereum, and others. And let's just take Bitcoin for an example. And that is because when you think about it, Bitcoin is not something that's very useful out in the marketplace. If you were to want to go to the store and purchase something with it, it would take 10 minutes at minimum for that transaction to take place. So it is not very useful in that regard. Also, there is a finite supply of Bitcoin. There's only 21 million Bitcoins that are ever going to be created. Therefore, that finite supply doesn't allow there to be enough individuals who can use it out in society. So that's another knock against it. So overall, it doesn't look like Bitcoin is ever going to be considered an actual currency. It's more a store of value, or more something that people actually consider as an asset that they're holding on to, believing that it's a hedge against inflation. So that's kind of the narrative about it as a whole. So when you think about it for the future of finance, Bitcoin might not necessarily be it. Now, Ethereum, on the other hand, with smart contracts, and it's a totally different network, might be more along those lines where you actually have that decentralization and you're going to actually be able to use it out in society. But that might be years from now when that actually comes to fruition. So up until that point, all we're seeing right now is broader speculation in the market, in the crypto space, indicating what people believe the value of Bitcoin to be, or believe the value of Ethereum to be, or believe the value of Dogecoin to be. So right now, it's not a safe space for you to go into if you're expecting to have long-term gains and for it to be a very peaceful ride. You might have substantial gains, but you also might have substantial losses. So I want to warn you that you're probably going to see continued volatility in the crypto space, irrespective of what Federal Reserve Chairman Powell does, irrespective of what the Chinese government does, irrespective of what the US government does. It's just going to continue to be volatile until it sees wider adoption down the road. And by that time frame, we might see completely new different currencies that are actually overtaking the original ones, such as Bitcoin and Ethereum. So it's just something I believe is important for us to be aware of moving forward from here. The best way that you can navigate the craziness in the cryptocurrency space right now is if you boost the like button for the YouTube algorithm. Just please hit that. It would actually help the channel a lot and help push this video. Other people might need to hear it so that they can make wise and well-informed decisions for themselves moving forward. So you might be asking yourself, should I invest in cryptocurrency? Well, that's a very important question that you want to ask yourself, but really you need to have a broader understanding of what your overall investment strategy is going to be. Just going after cryptocurrency is basically the equivalent of just speculating, and almost the equivalent, I would say, of gambling. You're basically putting your money out there, you're putting a risk, and maybe you believe in a specific coin or believe in a specific decentralization of finance moving forward, but it's not necessarily a long-term investing strategy. It's something that you're hoping is going to work out, but there's no way for anyone to predict how this is going to unfold. I could honestly see Bitcoin being worth $1 million or being worth $1,000 10 years from now. It's really that broad of a gamble. So in that sense, you really want to be cautious about how you approach this. Personally, what I like to do is I invest strategically into index funds because that has a proven historical track record over the last 100 years of returning anywhere between 5 to 8% on an annual basis when you have your dividends invested and you adjust it for inflation. Now I know when you hear 5 to 8%. That sounds like nothing in comparison to the hundreds or thousands of percentage points you're seeing different currencies go up. But then one thing you're going to find though is that in the same way that we have steady growth in the stock market over time, we don't see those intense crashes. If you see a crash, it might be like 20% that goes into a bear market, but then it recovers over time because generally speaking, with advancements in technology, with businesses becoming more efficient, and with just our overall economy moving forward and continuously shifting into the future, we're always going to see companies continuously progressing. That helps to move the stock market ahead. In comparison to the crypto space, we see a lot of coins being floated onto the market, a lot of confusion out in society, and they're not tied directly into any sort of profits or losses or any sort of specific value that any of those currencies are bringing. So that's why we see all this volatility. And without risk, you don't get reward. So I understand that if you go into the crypto space, you're taking a risk, you're going to potentially gain some reward from it, but you also could lose a lot. So the way I like to do it is I have the overwhelming majority of my investments go into index funds, and then a very, very small percentage goes into the crypto space. I try to keep that percentage right now less than 5%, and I really don't see myself ever exceeding beyond that. And this is something you might hear from myself and think, well, Zach, I want to be a bit riskier and take a little bit more of a percentage and do that in crypto space. That's totally fine. That's up to your discretion. I just believe I wouldn't be doing you a service if I was here telling you that you need to go and buy the latest coin or do the latest thing, because right now I do not know what is going on, and it's equally as confusing for myself to see this type of volatility. Now, one thing you might want to do is once again kind of look back onto where things are and how it has been just over the last year. We started in 2020 with Bitcoin at $7,000, then it went all the way up to in the 60s, and now it's down to the 30s. So it still has gained a lot over time. But the one thing that Dave Ramsey always says is the only people who get hurt on a roller coaster are those who get off in the middle of the ride. So if you are expecting to time the market by trying to come in early, buy when it's low, sell when it's high, it's generally going to be the case where you're going to buy when it's high and sell when it's low. That's generally how human nature works, where we're more comfortable buying when we see other people buying, and we want to sell when things are a little bit scarier. So from that standpoint alone, if you're in the crypto space, you might want to think about it for the long term instead of just trying to time it. Now, if you have made money on this and have been able to be successful, congratulations, I wish the best for you. But you might want to ask someone like the Dogecoin millionaire who saw his portfolio after he invested into Dogecoin go all the way up to nearly $2.8 million when Dogecoin reached a value of nearly 73 cents. But then now Dogecoin has gone into the 20 cent to 30 cent threshold where he's barely at the $1 million component, and he had the option of being able to sell at a certain point in time. So just think about that for yourself. If you're willing to hold and willing to go through the process, you might come out on the other side ahead. But if you do not have a broader strategy as a whole, where you have money going into areas that are safer and more secure, then you're really putting yourself at risk and putting your future at risk, and that's what I really care about. Another important thing I believe that you should be aware of when it comes to investing in the crypto space is to be aware of all of these new coins that are coming onto the market. You've probably seen advertisements or seen Reddit comments or YouTube comments for different currencies, whether that's SafeMoon or all these other things that are coming out there. And some people are making money on them, but it is just something you should be aware of, that a lot of these might be attributed to either being Ponzi schemes. They might even be something where they're a scam, where you're more than likely going to lose money, because it's very easy to create a cryptocurrency, to put it out in the market, to flood it with a large number of coins out in the market, and then sell it for a very low value. And you'll see the price maybe shoot up but then immediately drop back down. So one of the things that happens is generally the retail investors are the ones who get hurt in that instance. It's the people who are in very, very early who might benefit from what they call a pump and dump. But since there's no regulation associated with the cryptocurrency space from the United States government right now, we're seeing the actions that we normally would see as illegal in the stock market are now being done so in the crypto space. And that to me is very concerning. So if you're being tempted to go and invest into the latest, newest coin because of something you read on Reddit, I would really caution you against that, because I personally believe that is a recipe for disaster. Now, you might think that you could make a lot of money on that, and it's very possible, and some people have, but I would say the overwhelming majority are not going to be the ones who benefit from this. It's going to be the early adopters and those who have actually made the coins who are going to benefit from it. So you just got to be cautious about that, and I just don't want to see you get hurt. I don't want to see you lose your money. And that brings up a bigger point. If you're going to be investing into cryptocurrency as a whole, you might want to make sure that you're scaled back to a low enough percentage to where you don't really get that nervous if we see volatility in the market. So for myself personally, because I have such a low percentage of my money tied into cryptocurrency, I don't get that concerned when I see a crash. I'm not that worried. It's because I know that I could afford to lose that money if it doesn't ever come back, but I'm hopeful that maybe over time it could be beneficial. So that's generally the way I have more peace of mind when it comes to my investing, and I hope that if you adopt a similar strategy strategy, it will bring peace of mind to you as well. With all that being said, I'd like to thank you for watching the video today. If you wouldn't mind, please tap the like button for the YouTube algorithm. Help push this video to other people who might need to hear it. Furthermore, if you have any questions, please comment down below. I'd love to interact with you, get to know you, do any research on your behalf, so that you can make well and wise informed decisions moving forward for yourself as well. Furthermore, if you wouldn't mind, please subscribe to the channel. That would mean a lot to myself personally, as I do everything I can to create positive content that has a positive impact in your life by encouraging you and myself to lead lives of meaning and purpose, all while maintaining balance and moderation. And if you do subscribe to the channel, please tap the notification bell. That will notify you every time I post a video, which I do on a weekly basis. Once again, I'd like to thank you for watching the video today. I hope you have a wonderful day. Talk to you next time.